Welcome to Trade of the Week. With me, Zinati Kuma. Today, Petri Redelinghuys, founder of Herenya Capital, joins us for a technical analysis of Harmony Gold, Exxaro and Mondi. Thank you so much for your time, Petri. I think on every Trade of the Week for the past at least 2 months, we've spoken about gold, whether it's with you or the other analysts that we have on the show. It was quite interesting to see Harmony Gold releasing results today. Great results as expected, but the share price not really moving much. Is it just a case of there's just been too much buying that now investors are taking a break?
I think that, share price is actually down on the day by 80 basis points as we record this. I think that market generally doesn't move on actual facts, but rather what the expectations around those facts are. So if you look at jobs numbers or Harmony's results, whatever the case is, what the actual result is not as important as what did the market think the result would be, and how far is that removed from the actual. So the market expected more, thus it's disappointed, even though factually it's a good set of results. Yeah.
It's quite interesting because, I mean, they talk about record cash flow generation, a record dividend payout. What exactly are markets disappointed about?
I don't know. They wanted more.
Just more.
I've got a very not safe for work joke that I can tell now. That I should probably not do that. But generally, there is an expectation for more, right?
Yeah.
I don't know. The market just is. Remember, the market is an animal that drives on two prime emotions. Fear is one, and greed is another. So our job is to try to almost see through the mist and use these two base emotions of the crowds as an opportunity for us to act in our own best interest, and that's about as trader talk as you can get.
Yeah.
But basically, when the market is very greedy, it wants more, it wants infinite growth of a limited resource pool, for example. So fractional reserve banking is a good example of that. So it's very much driven by greed. In a situation like this, I think the market looks at it and says, well, the gold price is basically at record highs. The rand is relatively weak. Why are these guys not printing even more money? Right? And that can be somewhat disappointing. That, I think, however, creates a bit of an opportunity for us. I think that gold is at record highs. The rand is relatively weak. Looking at the environment and the fear that is being mongered, I guess, by the US president and all the drama and stuff that's happening there, I think the gold price continues to go up. We'll be through $3,000 an ounce relatively soon, I think. And the gold mining companies are going to do really well. And if we look at Harmony's chart, if we can do that very quickly, we can see here that the stock is sitting essentially on the 200-day moving average. So actually, you know what, I'll make that a little bit thicker for you guys so you can see it a bit better.
It's quite interesting that you say that the markets are driven by fear and greed. That sounds like Pandora's box, and we know what that produced was chaos.
Absolutely.
So I guess at this point, we know that short-term traders thrive in chaos.
I was having a discussion with somebody actually earlier today. Trading is a lot of fun, okay? And I'm not here to dissuade you from trading.
Yes.
I'm a stockbroker, right? I mean, this is my game. But if you really want to make good money in the stock market, just buy stuff, forget about it.
I hear you.
Anyway, when to buy the right stuff is why we're here.
Yes.
So this 200-day moving average is now a nice thick blue line over here. We can see the price has come down to that and is sort of bouncing off of here. So we think that this region is a relatively attractive entry point into following what is a very strong uptrend. And you can see that we have a historic relationship with this 200-day moving average. It'll dip below it a little bit here and there. So it might even dip slightly below here, but that wouldn't necessarily be a reason for us to get out. What we have here is a very strong original Dow theory uptrend. So we've got higher highs and higher lows. So we would put a stop loss sort of below this 150 Rand region, which is a massive stop loss if you consider that is trading currently sort of 188. So to put, a 38 Rand stop loss on that stock is very, very big, right? But this is a trend following trade, so you'd be in this essentially for the stock price to get to 250, maybe 300 Rand. You'll be in this trade for the rest of the year. It's not necessarily something that you're going to be in and out of in the next couple of weeks. So you might have to give it a bit of breathing room. But around this moving average is a great entry point. So a little bit of weakness today, a bit more tomorrow is potentially, in our best interest, as we can want to get the stock to buy it as close to 180 Rand as possible.
I hear you on putting the stop loss at maybe below 150.
So I'll draw it in here for you if you like.
Yeah.
We'll do that. So that's the previous low, right?
Yes.
So you'd want to put your stop loss there. I'll make it nice and thick. So you do want to put your stop loss there. And what we have here, and just bear with me for a second, is we've got these successive low points that are higher, right? And at the same time, we've got these successive high points that are moving up as well. So this is now, so you can see there, all the highs are higher.
Yes.
I should have made that a different color, but all the highs are essentially higher, and all the lows are higher as well. So that's essentially just, trend 101, where, you've got a succession of higher highs and higher lows, and that creates a nice, Dow theory uptrend, if you will. Dow theory, a guy called Charles Dow used to write the Financial Times many moons ago. After he passed away, I think in like 1914 or whatever it was, somebody collected all his works together and came up with, okay, this was his, theory on how markets worked. And originally it was kind of based on the industrial average and the transportation average, but it's changed somewhat in recent times because the transportation average isn't as important anymore. It's more tech and industry now. But essentially that theory still holds true for how markets trend and that kind of thing.
So otherwise, it is still an uptrend. You may see these dips which may provide opportunities, but otherwise, really, you are still seeing a solid
And I mean, the further we go back here, we're looking back in time here now to almost 2023, we can see this trend is just sort of all the way up. This 200-day moving average is a great entry opportunity. You might slip below it by a couple of percent here and there, which will scare you to death, but the trend overall here is up, and we think that this is an attractive entry opportunity. So just get long, stay long, and forget about it for the rest of the year.
A great time to be in gold. Well, it doesn't seem like a great time to be in paper and packaging, and particularly Mondi. But maybe that's also an opportunity. I was actually looking at the share price today, and I saw that it's down about 2-3%. And I was like, why? They didn't even come up with anything. No results, because the results were last month.
Everything is under pressure and is down at this stage, right? I mean, if you look at the whole Donald Trump is doing what he said he was going to do, and somehow that's very scary, and all the tariffs, and the Zelensky incident, I almost couldn't say that word. So there's a lot of fear and pandemonium in the market. So Mondi, we think, I guess roadmaps once again. The war in Ukraine ends. That's what we think will happen, right? Trump's not going to be the world's most popular man for doing that, because you've got the entire left that's currently sort of holding positions of power in government and media and all the rest. So there's going to be a huge amount of negative, Trump, orange man, bad. But at the end of the day, the war will end.
Yes.
That is good news for recovery for Europe. That is good news for everyone, really, but also good news for Mondi. So it's a large part of their market, that kind of thing. So when their market starts to recover, we think that that's a good thing. Also, if you look at the price, we're essentially ranging between 265 Rand and 370 Rand, and have been doing so for some time. I'll zoom back a little bit and you can see, okay, every now and then we pop above it. Nice little head and shoulders, brought us all the way down to the bottom of the range again. But again, we're looking at about 5 years worth of data here. And every time we've come down to, this sort of support level, the further we go back, the more we see that these levels are, relatively robust. I mean, here we are 2017 on this level as well, right? So we think that sort of close to this 265 Rand, we can maybe trade it back up to 372. I think, if I'm not mistaken, I've called this already on this show, closer to the bottom. The last time I was on, I think this was probably my stock pick then too. I'm not 100% sure, so someone fact check me. But we still think that this is quite an attractive sort of entry point. We do see a small, sorry, I'm not going to do the whole infinite zoom in thing here. You can, if you squint your eyes just right, you could probably see a little head and shoulders formation forming over here. Just for the sake of interest, I'll see if I can even draw it. So you can do a little shoulder, a little head.
All right,
a little shoulder. Boom. Ta-da!
Okay. I see it.
Fancy.
Now I see it.
So you could be able to, so this little formation actually sort of targets around the bottom of this trend line again. So if you're patient, you might be able to pick it up at 265. Otherwise, it's probably safe to buy it now.
Even now,
Anyway, your risk reward is pretty high. You could stop loss at, say, 260, maybe 250 as a stop loss to give it a bit of breathing room. But otherwise, your target is sort of 272. Again, this is the kind of trade you're going to be in for many months. So there's no real reason to rush into it. This little head and shoulders will have all the bears, itching for more, right? But that might be the opportunity for you to get it at 265 Rand a share. So a little bit of patience, but you're essentially trading this range from the bottom to the top. So I'm just going to remove that.
Yeah.
So you're trading this range from sort of here, in this price range that it's been in for, if we look at a monthly chart or a weekly chart, sorry, a mighty long time. We're going back to 2016, I think is when the first time it came into this range.
Okay.
2015.
Oh, that's interesting, actually, looking at it from including that period before 2016 as well.
Yeah, so I mean, look, the flip side to this is that if this range breaks and we actually do get a confirmed breakout, then, good night nurse, right, for Mondi. But that's why, this is a high probability trade. And I think one of the things that you have to try to do when you trade is try to trade setups where the odds of success are fairly high, right? So we know that probabilistically this thing has bounced historically at 265.
Yes.
So probabilities dictate that it'll continue to do that. If it doesn't, that's why we have a stop loss, and you can manage your risk. But if it does, then you know that there is, there's like 100 Rand a share that you can potentially make on a 250 Rand share. It's a good return. It's almost 50%, right?
Okay.
So that's a very high probability trade for us, if you want to put it that way, where the probability of success is relatively high, and the payoff is relatively good as well. So you get a very good risk reward, maybe 1 to 5, 1 to 10, even if you get the right price. If you get it at 265, you can get a fantastic risk reward on this trade.
So this basically all hinges on economic growth, particularly starting off in Europe?
Well, to an extent, yes. I think it's more of an end of the war play, if you will.
Okay. Yeah.
I think that we are going to see a lot of noise around, the war can't end because we don't know that Russia is going to give guarantees and blah, 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 and all this kind of stuff. But essentially, I think the war trade is over.
Okay, I hear it.
Yeah, it's a weird thing to say because, a couple of years ago when the war broke out, and sometimes we feel callous. I mean, this is a heartless job.
Yeah.
We're buying defense stocks.
I remember.
Right?
I mean, even now, the defense stocks in Europe have actually been doing very well.
Because the contracts are coming through, man. The longer the war drags, the bigger. So they'll still continue to do well a little bit. But the peace talks, if a peace agreement is dealt, I mean, I saw Zelensky said that he'll step down if he can get a security guarantee and if Ukraine can join NATO. So I don't know if that's going to be an acceptable deal for the Russians, but a deal will be brokered.
It's coming.
And I think that's going to happen within the next 6 months. And I think that we probably then see, look, defense stocks will continue. Prices might come down, but the contracts are signed. The earnings are guaranteed for the next 5 to 10 years. So they're going to continue to do well. And I think the rest of the sort of industrials will start to recover.
All right. Well, let's go back to commodities. We're looking at coal and iron ore here, Exxaro. I actually also saw that today that's down 2%. Not really sure why, but just walk us through that chart. I mean, there's been a lot of noise in terms of leadership on Exxaro where we haven't really looked at what is actually happening with the actual company.
Look, I mean, again, we're essentially playing a recovery here, so we're not gonna. I don't really want to get too much into like leadership.
Yes,
and,
that's its own thing.
That's a whole different thing.
Yeah.
JP Verstappen is much smarter than I am with that stuff. I just look at the pictures. Okay? So I'd love to hear his opinion actually. But essentially, if we'll start sort of with a longer, bigger term picture, weekly chart, we have a relatively strong, significant level at around 150. We can just see multiple touch points, right? Over the last couple of years, we've also seen it, and I say a couple of years because this is 2021, January 2021, November 21, next touch was August 23, and then the last little while was September last year, now January, and now again February, that we're all sort of dancing around this 150 Rand sort of level, right? So if we switch that then to a daily chart, there are a couple of things that are worrying here. This moving average, this 200-day moving average is now sort of, pointing down, if you will. So that's not necessarily the greatest thing. Regular viewers will know that I've been a bull on Sasol for some time, and it's down 8% today, I think, or something like that. So it hurts my emotions. So buying things with downtrends, not always successful, I think is the point I'm trying to make there. But again, we have this high probability situation where we have a support level at around 150. and a high probability setup with potential lots of upside. And again, an end of war kind of situation where industry comes back, they're going to have to rebuild Ukraine. Iron ore is going to be something that is going to be in demand. So, we think that essentially Chinese growth, rebuilding a bit of Europe, end of war type of situation, this 150 Rand level presents a very good entry.
Coal, also with Trump in office, would coal actually be something that could see significant upside because of this kind of whole moving away from renewable energy?
I think there was a thing that I read. I can't remember the bank that put it out, but they basically said that green energy is dead for now.
Yeah.
Right?
Yeah.
Which is something that I think we've spoken about a little bit, that, green energy is great, but it's not necessarily, the entire future. There's got to be more efficient ways of doing it. So I think that we've been backing the uranium play for some time. We continue to back that. But we also think that dirty energy, we never got out of oil. Put it that way, right? I think that green energy for now probably is dead, and coal and coking coal and all this type of smelters and stuff, it's all coming back. I think, at least.
Yeah. All right. Well, a lot of people are basically thinking that way. I saw over the weekend BP saying that they're pulling their renewable energy targets. So it's a very, very interesting time that we are living in.
It's just one last thought. I think the ESG narrative really took off for a while, but I think that it's a pendulum that swings, right? It swung very far in the one direction. It's now swinging back.
Yes.
So I think ESG will become significantly less important over the next decade. And then probably after that, more important again, right?
Yeah.
But for now, I think the money will flow to where the most efficient allocation of capital can be, and that I think for now is just in traditional resources, traditional energy sources, uranium.
All right. Well, thank you so much for your time, Petri. Really appreciate it. That was Herenya Capital's Petri Redelinghuys. And that's all for this week's segment, but do stay tuned for lots more coming up right here on Business Day TV.